Once again, welcome to Augwood Forex Capture Trading Signals video 6. My name is Augustine, and I still want to encourage you to watch all our series of videos we have released for your benefit, for you to have a fair idea of what Forex trading is about, for you to understand what it takes to be a Forex trader. And all our videos can be found at our website at www.augwoodforex.com, and you'll be able to get all these videos and more. I'm about to discuss with you the video 6, and I'm so grateful those of you who have watched the subsequent ones. I believe you are blessed, and there's more to come. Now we want to still, as usual, how we normally do it, we consider the fundamental first, so that you can see by the time we finish all this series, you will now have a fair idea of what Forex trading is about. When they say fundamental, what are the news? That is the market mover news. Now before us is another man who also supposed to give a speech concerning their economy, and that is the US. And this news was supposed to be released at 8:30 p.m. GMT by the Federal Chairman, by the Federal Reserve Chairman, Mr. Bernanke. So here he is supposed to give a speech at this particular time, and these are one of the powerful men in the financial industry, that when they stand to give speech concerning their economy, as a technical trader, you need to watch out and take your stand and protect your investments, because they have the tendency of really causing serious volatilities in the market, because the greater parts of traders will want to look at how the US economy is, so that they can be able to invest. And as soon as they begin to see those signs from the Federal Reserve Chairman speaks, they begin to invest right away without waiting for anything. That is why the market at times become extremely volatile during this type of speech by the world powerful financial organization representatives. Now I want to take you through this particular news that I captured it in video for you to see how for you to understand what I'm saying, because the market can at times be extremely volatile, just because one powerful individual is giving a speech concerning a nation's economy. Now we are considering the US Federal Reserve Chairman Bernanke speaks, and this is how the market is reacting to that particular speech. Before then, you could say I'm in a trade for a buy already, because I've got my signal for a buy, because as a technical trader, I don't wait for the news before I trade. I just go ahead and trade my system. So during that period is the time that I use to protect myself, or I watch out to see if it's going against me. I only tighten my stop loss. But at times it can also be a credit to you as a technical trader to be able to make more pips from their speech. So you could see I was already in the trade according to technical trading, and this is the stop loss here. And as you can see, the market is reacting to that news. So as you can see, this is wonderful, and you can see how the market is responding to it. This is where the market was when they released the news, and within a short time, just in 1 hour, look at the move. This is serious, and this is because the Federal Reserve Chairman is giving a speech concerning the US state of economy, and the market is moving based on this, based on his speech, what he's saying, and investors are looking for key points to be able to invest. So this is it. So when we say fundamental trading, this is what the market at times can do. At the same time, I'm still in the trade. This is where I enter the trade. My stop loss is here. I'm in serious profit. I still have to remain calm because I can still take so much from the market. And look at where my stop loss is, and now my stop loss has been, my take profit, sorry, has been hit. And I can measure, and for you to see, this is it. Is my stop loss is 40 pips, and look at it, take profit, it's around 350 pips. That is wonderful. This is it. So at times you can still, though they are about to release it, just still remain calm and benefit from it. As a technical trader, don't panic as such, because you know what you are trading as a technical trader, and at times the news can favor you to be able to hit something big. So when they're about to release, just remain calm. Just tighten your stop loss and remain calm, and it's possible it can move in your direction as a technical trader. Now let's look at the technical analysis once again on video 6. Now this is a trend line buy signal on the 10th of October 2013 on the pound USD currency pair. It makes 227 pips in 6 days. This is wonderful. 6 days. Now this is the time whereby the US are having they were having a problem with a certain policy that they want to reverse, and basically I saw the news on the telly that the US the US government shut down, and I got to realize that there's going to be a serious problem, and they were supposed to agreed by 17th of October what to do. And since they made that statement, the market have been so quiet from Friday till Thursday. So you could see from this point, you could see this 1 2 3 4 5 6 candle, and this day was on the 17th. So for the past 5 days the market have been so silent because there's a deadline for the US to do something, and my trend line is telling me it's a buy signal. So I just have to remain calm, and I enter my trade, fortunately or unfortunately, earlier on. So that's the reason why my trade stayed for 6 days, because my stop loss was not hit. My trend line was still giving me the signal that it's a buy, and I have to remain calm. And as the days go by, I wait for it, and lo and behold, it paid off. And when on the 17th of October came and they decide, the market now triggered and it moves in my favor, and I made 227 pips in 6 days. So as a technical trader, you should know when to remain calm, because if you decide to exit, which direction are you going, and you have a trend line telling you it's going to buy, this is forex trading, and it's wonderful. Now let's look at the next signal also. This trend line buy signal on the 9th of October 2013 on the Euro JPY. This also made 209 pips in 4 days. This is it. This is the trend line that is there, and this is the signal. This is the confirmation to all these trades. You look at the bottom here and you get the confirmation. Look at the price, the balance there, and you can see it's corresponding with the pips we've said. And look at it, trend line, another trend line, buy signal from here, you can see it, and straight from here. Now there's another wonderful thing also, draw down resistant line. I'm pointing it down and I'm eyeing it also for another short. So this is how technical trading approach is, and wonderfully, look at it, resistant line I draw down, holds, resistant line sell signal on the 15th of October 2013 on Euro JPY, made 61 pips in 1 day, sharply, and it's wonderful. This is it. This is technical trading. Now after the price drops sharply, I quickly have to draw my support, my resistance, my trend lines to now spot the next possible reversal. And unfortunately for me, I drew it, the support line, I drew the trend line, but yet I miss this move. Yes, it's possible, because you cannot get every move in the market. Yes, so this trade, so support and trend line buy signal on 16th of October 2013 on Euro JPY was a missed trade. That's wonderful. And look at it, it's serious, it's quite, everything is clear that you can take it, but you cannot just take every opportunity in the market. But whatever opportunity you are able to lay hands on, you take it and you wait for the next signal. So this is it from on the 7th to on the 18th of October 2013. That's 2 weeks of trading. On the pound USD, we had one trading signal that made 227 pips in 6 days. And on the Euro JPY, we had 3 trading signals. The first one made a profit of 209 pips in 4 days. The second one 61 pips, and the third trade was a missed trade that could give us a possible of 200 pips. And this missed opportunity lasted for 5 days. This wonderful. So in summary, in 2 weeks of trading, we had 497 pips gain. So now let's go to our money management and see how our table looks like. Like as I've said, if you've not watched, this is video 6. You need to watch all the previous videos so that you can understand this table that is before us. So now in video 6, we made a profit of 497 pips. So let's assume at our 6th level, we are now trading with 4% per trade, which is high risk. But because we've accumulated profit already, we can go ahead and trade this high lot size, because the capital, the initial equity is secure over 60%. So we can go ahead and trade this high risk and still be able to be within management, within a very safe approach. So we're able to make more profit. More money means more profit. So we assume we trade these 497 pips with 4% exposure per trade. We would have recorded 19.88%, which is equivalent to $1,988. And now our new balance will now be $18,605, with the total of 3,427 pips in 13 weeks. So you need to watch all the subsequent videos so that you can understand this particular session, because we are trying to build a risk and money management approach. This is the risk and money management approach of Augwood Forex. So if you engage our service to learn, this is what we are going to teach you so that you can trade profitably. Don't just go and place 4 or 5 trades and have your account wipe, and I don't know what you are looking for. Are you so desperate for profit that you must trade that kind of high risk? Why not take it safely? From 1%, you accumulate profit, then you rise 1.5% per trade, then you rise to 2% because you are making profit, so you can now keep rising. This is Augwood Forex money management approach. Thank you very much once again. My name is Augustine. Watch out for video 7.